Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, July 23rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. Something funny to note here on the video that I did yesterday, that it didn't perform as well as far as viewership. And one thing to note here is that Google and YouTube, their analytics here, their AI had flagged my video here for election coverage surrounding South Africa. And I was trying to think that I mentioned South Africa because oftentimes when I do that, I'll talk about platinum, I'll talk about Eskom, I'll talk about mining constraints here with rolling blackouts and how that impacts prices to the upwards. Well, the reality is that what happened is that on this Bloomberg screen, one of the fine print headlines was talking about the election results and the coverage surrounding the South African elections, and the video here was flagged as a result of that. So it's interesting to note that that was probably someone else's job back in the day here, and that job has now been replaced by artificial intelligence. And that's why we believe that over the next couple of years, the labor market is really going to go through some shifts and some changes where, you know, you look at those South Park episodes where it talks about they took our jobs. Well, AI seems to be taking some people's jobs out there, and where it's just focused now mostly in the technology sector or in autonomous driving and things like that, it's becoming more and more of a robust state here. And that's why a lot of earnings announcements, and we are in the peak earnings season here or getting into it, you're going to want to see that companies are continuing to spend on AI and AI development because it keeps them up with the trends. And that's why you go into about a year or 2 years ago when AI was really starting to take over, any company that mentioned that, their stock had dramatically risen. So getting a bit off topic here. So let's get back to the silver and the gold market, because we saw the biggest single day jump in silver ETFs that I've tracked for over a couple decades here. I mean, it's got to go up as one of the larger ones here, tacking in about 11.3 million troy ounces of silver. So what's happening is that you saw that breakout in the silver market. You saw it get up and peak right around that 39 and some change area that was back a couple weeks ago. Since then, silver futures, and I outlined this in the chart pack, you could register for the link in the description below. Futures had come down to the support level, started to turn higher, and then as copper futures take off, that's where silver futures start to track from an industrial metal standpoint, and they're reaching now the likely target right around that $40 range. Now, can silver futures hit $40? And the first thing that I do, and I outline this in the Metals Edge, is I'll look at, hey, what is the tactical resistance point 1, 2, and 3? And are we making higher highs and higher lows, which we are on both of the gold and the silver market, as far as what the tactical support level 3 is and resistance level 3. So what that'll tell you is that the volatility is moving upwards on the charts, and logically you could see that now, if we have an upward movement in the silver market or anything more characteristic of what we've seen over the last 3 days, 40.23 would be your first level of resistance, followed by 40.81 and then 41.38. That's how I use this particular product here. And then I'll look at the support levels for monitoring and moving stop losses up, protective stops and things like that. And then also looking at adding additional positions. Now, something that I'm getting a lot of questions about, because if you look at the precious metals here, a couple things to note is that the gold market down about $10. That's down about 0.3% here. The low on the session was 34.29. The high of the session, 34.51. When I started doing this video and putting notes, we did see gold futures rise back to about unchanged. And since then, they've sold off here as more and more people become involved with the market. So looking at the positioning, because I'm getting a lot of question around the gold market here, because it shot up about 2.5% on the week. So let's begin on the positioning in gold and treasuries. So after reducing gold near the 33.65 resistance point, and if you look at gold going back from the start of 2025, breaks through the 3,000 mark, takes off at an accelerating rate because of the tariffs, the tariff uncertainty, the get me out of the stock market, get me in a safety trade, which peaked out right around April 22nd. That was when Trump had posted on Truth Social that you should buy stocks. Now it's a great time. It marked the peak in the gold market, marked the bottom in the stock market, and since then, we've seen the V-shaped recovery in U.S. equities. We've seen consolidation take place in the gold market. Although a large range back and forth, it was really the tight consolidation over the last 30 days with that 33.65 resistance point coming in. And of course, the sell-off here were shallower in nature as the market was coiling up. And when the market coils and it gets very tight, what happens is we tend to see one big explosion in one direction or the other. So what I did was, when we saw the breakout to the upside, I opted to own a similar proxy, which was 10-year treasuries, as that gold market was really accelerating at FOMO-like speed. So many of you choose to implement the October 112, 115 call spreads, which we reduced yesterday as treasury yields sharply declined to tactical support levels. Treasuries look to end their 5-day winning streak of gains here as we see demand for safe haven assets decrease following the signs of a trade deal between the US and Japan. You'll see all over the news that this is the largest deal in history between the US and Japan in marks history. So gold, it declines down to 34.29 before rebounding, and it lags the metals complex here, while the yield on the treasury notes, they do rise here about 3 basis points to 4.38 and breaking that week-long downtrend. So yields have also increased in Germany and the UK in markets. They are predicting that the Fed will maintain interest rates here at about 4.25% to 4.5% next week here when they do meet, but traders are anticipating at least one interest rate cut by that September meeting here, and I'm in that same camp as well. If you look at Fed Governor Waller, he came out and he made his case here that the Fed should really consider cutting rates in July and additionally in September, and that it will make no difference here realistically if they cut rates a little bit sooner, which would appease Donald Trump here rather than later. Now, if you look at sticking on that same thing here and on the tariffs, is that there are several countries that are still racing to secure those agreements ahead of the August 1st deadline. Investors are continuing to see clarity on the progress between China in particular because of the fact that U.S. Treasury Secretary Bessent said he'll be discussing a potential extension with China next week here. So what's happening is those safe haven assets, they're really starting to lose some steam, and then the FOMO is really starting to go back into the market. So remember, as you navigate out of the storm, what historically happens, remember past performance, not indicative of future results, is that gold starts to lag when you come out of the storm, and then your other metals here, such as copper and silver, tend to rise, and stocks as well, particularly the NASDAQ here, as you get into stagflation, because silver, copper, things like that, they tend to add to inflation as costs and things like that. The Bloomberg, the commodity index starts to rise as well, and you get in this stagflation environment. So paying attention to the particulars is really essential when you're navigating the complexities of the financial landscape, particularly as markets, they are global. And if you feel like you're missing out on a market like gold and silver, remember, these markets, they continuously provide you with new opportunities. I would become less focused on the psychological level of $40 silver and more interested in the chart pattern here. Are we breaking out? What are we doing? Are the fundamentals and the dynamics of the market continuing to line up? Can I manage my risk properly here? And oftentimes what I'll do is I'll treat each first trade here, when you put them on, as a one-day type of trade. Do people engage in day trading? Well, yeah. When you put your first trade on and it is a long-term trade, monitor it for the day. See how it sets out. Is it breaking or is it signing off any red flags? Oftentimes that tells you, hey, let's call timeout. If you watch basketball and all of a sudden the opposing team has 5 straight breakaways, and next thing you know, you're down 13-0, you might call timeout and kill the momentum there. That's what you often got to do in trading here. So I'd say start off with every trade as how is it going on the day? Then you build it out into a swing trade and into a long-term trade after that. That's getting a little bit more on my process and things like that. But shifting over to the equity markets, because we got a lot of green on the screen here, stock futures, they are higher after that U.S.-Japan trade deal, fueled hopes that an agreement with Europe now we're talking. So we got China being going to be kicked the can down the road at that meeting next week. We got Europe coming into focus here, and we've got the meme stock frenzy really underway. I don't know if you guys seen GoPro, Krispy Kreme. GoPro up like 40-something% in the pre-market. Krispy Kreme up 26%. Give me those 2021 AMC and GameStop type vibes. Now back to reality with stocks. We are going to have Alphabet. We are going to have Tesla. They're going to kick off the earnings here for the Mag 7 after the close. So we'll want to keep an eye on that as well. looking at the markets at a glance, dollar index slightly higher, was weaker on the session here today. You got the euro currency slightly weaker as well. Gold futures tracking a bit lower. Platinum futures just off just a touch here. Silver up 16 cents. Copper, the big mover and shaker here, as some of these deals get underway here with the Asian countries, which consume much of the copper. Plus, I did see some headlines about some copper mines being offline, some problems and things like that occurring here. You do have crude oil futures down about 50 cents. That's an interesting one on the chart pack, coming down to a key level of support. Might stick a toe in the water, not a recommendation to the public, but it's just some kind of observation, some things that are on my radar here. So I'll keep any of our clients posted if we do get involved with that market. Cryptocurrencies taking a little bit of a breather here overnight. We will be putting out charts and also ranges here on Ripple, on Ethereum, and sending that out to anyone who registered for the crypto chart pack as well. Now looking at some other things here, the Canadian dollar back on my radar, and I'm going to be looking at the futures and the options on that particular contract because it's a commodity-based currency, and oftentimes it mimics the movements specifically around key commodities here. So if you look at the gold-copper ratio, those charts, they tend to mirror each other, and what I just say is that oftentimes when you come out of a storm, gold futures tend to lag, copper and silver futures and industrial metals tend to push up. So we got the crypto, we got Bitcoin steady here, we've got Ether steady here, and we've got, as far as central banks are concerned, Fed communications, external communications, blackout period till that July 31st. Economic data kind of weak here today, existing home sales here month over month, year over year. Crude oil inventories I'll be watching because oil futures are getting close to those lows. I do have a lot of people asking me about the volatility index, which has been coming down. Put options on the S&P 500, but the reality is that those end of month risks, they are starting to fade off. Deals are being made. We're getting closer to the Fed interest rate cuts because of the cracks here in the labor outline surrounding AI and things like that. And a lot of times, I hate to tell you this, but historically, gold, in my opinion, it has peaked sometimes. I'm going to have to look at some back testing on this on that first interest rate cut because of the fact that the terminal rate becomes more clearer where it's at. And when the Fed gets done cutting rates, oftentimes that's when gold futures kind of lose their steam here and people look at other risk assets to get involved with. So the futures have to reprice to match the terminal rate and you get that first interest rate cut. So your gold, your exchange traded funds, they added a bit on the gold market here, but it was really that silver market. So we're going to want to continue to monitor silver as silver futures get close to that $40 range. If you haven't registered for things like the chart pack, the metals edge, that's where I can really give you, I think, some bang for your buck here as far as levels are concerned and some clarity and some navigation around these markets here. Remember, you're the captain of the ship. You call the shots. I'm just here to help you navigate some of the waters, give you a bit of a compass, and not hit any kind of iceberg. So you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.